All right. In one of my last reports, I noted that I would point out if I saw any good trading opportunities while we wait for gold to finish its correction. I really don't see anything yet at the moment that I would say has a good risk reward profile. If we still had free markets, I would uh, say that there's a really good trade short the stock market, considering how late we are in this intermediate cycle. The last really clear intermediate cycle low came way back here in June. And even if one were to consider this as an intermediate cycle low right here, we're still very late. We would still be in the third daily cycle if you want to consider this as a intermediate cycle low. But we don't have free markets anymore. So this is a really risky trade, in my opinion. Uh, Although I would also say that it's very risky to be long right now. We're getting very late in this daily cycle. Um, Monday will be day 27. The last cycle ran a little bit long, so I would think this one might run a little bit short. And considering that this cycle is, they've now right translated this cycle, then it seems to me, unless we get some kind of really severe crash event that brings us all the way back down to, um, say, the 200-day moving average, would something that would complete a failed daily cycle, and by that I mean it drops below this cycle low. Unless we get some kind of a crash event here in the next couple of weeks, then I'm assuming that we're going to need another complete daily cycle before this uh, next intermediate cycle can unfold. And that means probably another 2 months. So while I was expecting the ICL to um, be completed end of January, maybe first part or middle of February at the latest, it now looks like the intervention is going to draw this out another daily cycle, and then we're going to, it's going to be sometime in um, probably April or even May before this intermediate cycle bottoms. So I wouldn't, I can't give my blessing to being long right now. It's just too late in this daily cycle, and it's also too late in this intermediate cycle. And if we get, I guess, if we get some kind of a news event, maybe there's a snafu with the phase one signing of the um, trade agreement, then maybe we could get some kind of a severe crash event that would take the market down and break below this low, and maybe we come back down and test 3,000 and the 200-day moving average, and that would be our intermediate cycle low. But it's pretty hard to bet on that with the plunge protection team protecting this market. But I can't give my blessing to uh, certainly not adding long positions here. I guess if you've been holding long positions all the way up, you continue to do so until we get something that um, would indicate that something more severe than just a 1 or 2 day decline is in progress. And I'm not even really sure what that would be. I guess we could view this as a half cycle low, even though it never even broke the 10-day moving average. So I guess you could like put a line in the sand right below this low right here, kind of view this as a corrective dip. And if price were to come back below that corrective dip, make a lower low, then maybe at that point we could um, confirm or accept that maybe a daily cycle low has begun, and um, and then see where it goes. If it gets enough selling pressure behind it, and maybe if it could come down and break this daily cycle low, then at that point we could say that we're back on track for our ICL in January or February, and it would be occurring during this daily cycle. So maybe you use that. For anybody that's still long the stock market, maybe you use this line in the sand right here. Let me shorten this chart up just a little bit. So let's just say we're going to use this line in the as our line in the sand. This is about 3211. If the S&P comes down and breaks below that level, then I would say we use that as confirmation that the daily cycle low has begun, and if we get some kind of aggressive selling pressure that maybe comes down and breaks this daily cycle low, some kind of a mini crash event, then like I said, we could go back to the original scenario of expecting our ICL here in January or early February. So other than that, I would not be adding to long positions right here. And if we had free markets, I would be starting to get heavily short. But it's just so hard to do in our modern markets. We've just got so much government intervention, QE. It's hard to fight the Fed's printing press. So I cannot give my blessing to trying to short the stock market because they just may not allow this thing to correct. And even if we do drop below this low right here, they could reverse it very quickly and turn it back up and shorten the daily cycle low, kind of similar to what happened here. We broke below this corrective low, but they stopped the daily cycle low very quickly and turned this back up in time to have the market going higher for not only the FOMC meeting, but throughout the entire holidays. They didn't want a repeat of what happened last year. All right, moving on to energy. Energy could get interesting if this correction were to continue for a few more weeks and maybe come back down to test the bottom part of this range. We've kind of been stuck in this range between this top back here in the early part of the year, and we just haven't done anything but chop around in this range all year. And I have not really been all that interested in trading energy since we exited this trade back here in March. If oil can continue, can break through the 200-day moving average, get back down here in the low 50s, then something that would qualify as an intermediate cycle low, then at that point I might become interested in trading energy again. I still don't know that it's going to be able to break out of this $50 to $66, $67 range that it's been stuck in for a while. But if we get to the bottom of the range, then we would have some potential anyway to maybe get some kind of a trending move that could take us back to the top of the range. And then if we look at a long-term chart of the CRB, it does look like that this is bottoming. We're getting multiple tests of the 200-week moving average. We got a slight move above it a couple of weeks ago, but this week, as oil has come back down, the CRB has broken back below the 200-week moving average. So it looks to me like we're just not quite ready yet to get a breakout above this in a sustained move, something that's going to start the 200-week moving average moving back up. So also, I kind of suspect this is a 3-year cycle low here, but we haven't had the really powerful move out of the 3-year cycle low like we normally do and like we had back here. And that makes me think that this is still going to be a rather slow process of bottoming, and we may have to spend a little bit more time back below this 200-week moving average before we can make another attempt to get above it, and then finally hold a sustained move above that level. So might be interested in energy, maybe a little bit later in the spring. Right now, I want to see if we can get back down to the lower part of that range before I make any decision on whether or not to try some energy trades. Just a quick word on natural gas. Um, it has broken out above the 10-day moving average, but I gave this a shot early in the year, and it's just too volatile for me. I'm scared of this one. Uh, it, it's so erratic. We've got higher highs, and now we've got lower lows, and in a market like that, I just don't feel like I can trust any move. Um, we've had several times here where price is broken above the 10-day moving average only to just give it right back. Here's another one. So I don't know that this is the beginning of anything significant. Um, so I am certainly not going to trade natural gas anymore myself. I would never trade it with real money anyway, but I did try and trade it for the challenge earlier in the year and just didn't have any success. And I don't know that I would have any more success now. Um, I'm just not confident that any move is going to be sustainable, and it's so erratic. I'm afraid that any kind of um, rally could terminate suddenly, and then just end up giving back all my profits, or end up buying a little too high and then having to sell low for a loss. So not really interested at all in natural gas. But for those of you that have a death wish, and are going to give the Widowmaker a try, at least it did move above the 10-day moving average. Maybe you could just put a stop right back below the 10-day moving average. If it moves back below that, then stop out and get out of the way again. All right, moving on to gold. I think we're going to move into a sideways range here. I think we're getting ready to do something similar to this. Um, Gold hasn't broke back below the 10-day moving average. It hasn't really completed any of the confirmations that I like to see at a daily cycle low. But back here, it only really gave us two. If we drew a trend line right here, it marginally broke that trend line, and it did close back below the 10-day moving average and turned that average back down here. But this sideways correction lasted about a month. So I don't think we need to get in a big hurry to reposition in metal trades at the moment, unless gold comes back down and maybe drops enough to test this resistance and support zone right here around 1520-ish. If it were to do that, then I would say we've got a true daily cycle low and something we can buy with the anticipation that price will pretty quickly reverse and start trending higher again. But at the moment, my spidey sense is saying that we're probably going to churn sideways for several weeks like we did back here. If I convert this to a weekly chart, you can see this is very similar to what this look right here. Price had gotten stretched a very long way above the 10-week moving average, and then just had to churn for a number of weeks before we could get the next leg up. We're kind of in a very similar situation. Price is very far above the 10-week moving average. We may have to go sideways for a few weeks and give this moving average some time to catch up to price. This is the bullish percent chart, and remember the bullish percent is a overbought, oversold indicator. This isn't a sentiment chart, and we still really haven't come down at all from these rather overbought levels at 85%. I would I would really like to see this come back down a little bit, at least back down to 65 or 70, and then I think we have some room to rally again. So not in a big hurry to buy the miners right now either. And with the bullish percent this high, there isn't a lot of room to go to the upside. So if we do get a daily cycle low quickly and continue to rally, I don't think it would get very far because we're just too overbought right now. So all in all, I don't really see any good setups, and I think probably the best um, strategy right now is just to sit on the sidelines and wait for something to give us a good risk reward profile. Um, if I do see anything that pops up, I'll mention it, but right now cash looks like the preferred investment to me. All right, we'll see what Monday brings, and that's it for the weekend report.